So, Shavyfxhub, let's look at US government 10-year bond yield. You see, the United States government like to borrow money. They like borrowing money. They borrow money with different time of repayment. They have 2-year bond yield. They have 10-year bond yield, 30-year bond yield. And the 10-year Treasury bond yield has the strongest impact on the US dollar index, as it serves as a critical benchmark for investor sentiment. It reflects economic growth and relative interest rate dynamics. So traders watch it a lot. They use it as a gauge to ascertain the state of the health of the US economy. Although occasionally, sometimes 2-year bond yield is also looked at, but I think I prefer 10-year bond yield because I've been looking at a correlation with the dollar index. And I've seen what happened here in the month of April after the US government bond yield returned to area of demand on that ascending trend. Of course, we have a breakout here, and you can see that breakout and see what price have done subsequently after that on the daily time frame. And we got a push in price. You go back and see what you've done on a normal chart. It's a beautiful price action. One line rule, please. So we have here, so there's a strong supply roof from 2020. And the price came here to form another supply roof, making it an ascending trend line. And we have a breakout structure followed by a retest and another retest on ascending trend line, breakout structure. And we have same price return again. Trading is very simple, but you need to be very patient. Trading is very, very, very simple, but you need to be patient. So we're having fun with this thing now. So let's see. Now you can see that the month of April brought in that push in the 10-year bond yield, and you have seen the XY reflect on that. So it's okay to see that the 10-year yield has a direct, correlation with DXY. We're looking at it and how they move. The rise in 10-year Treasury yield typically strengthens the dollar, is bullish for DXY, or a decline, which is bearish for DXY. This occurs because yield attract foreign capital inflow, increasing demand for dollar to purchase US bonds. So carry traders are watching. The carry traders are watching. They're all over the globe. They are money managers. They are moving money from one country to another. They borrow from yen. They go to US government and they buy bonds and they watch the bond yield rise and they monitor the sell and they get off the market and they go back and pay their loan. So it's a currency business. Is a hidden business that we wish we knew it earlier. So now we have a descending trend line. So let's see if we have a breakout so that we can have this thing settled for once. We're looking for a breakout from the high of October 2023, and the price creates another significant high. And on that high, I want to see a breakout from that structure. If we have a breakout from that structure, that will be historic. That will be historic to see the bond yield exceeding 5.0%. Well, it's now with the current debt mount on the US government, there is an alarm, IMF sending alarm. The debt is really running into trillions of dollars. But, debt is part of the economy and it's a debt system. So let's see what happens there. We're looking for a breakout from this descending trend line. So you have a chart pattern here, a contracting triangle. And we're optimistic that after price updating the floor, there is a very high probability that you could be seeing the 10-year bond yield break to the upside. And let's look again. We have another structure. I have another structure at this level that also reflects supply. So if that structure is broken on daily time frame, I want to see it. So this structure reflects a strong supply that have stopped price in the month of January 2025. And since then, if you go back and see the DXY has been falling. And if you notice what happened here from 7th April into 10, 11, 12, you notice that GBP USD started retracing, Euro USD started retracing, USD JPY started, again. And I think the most important effect we had here was in EU. EU had a very serious effect, and we saw EU, try to correct, and we have seen GU, but UJ seems to be doing something I do not understand. And we have looked at the Japanese government 10-year bond yield, and as of yesterday, the 10-year bond yield came to supply roof, and the market opens for Japanese 10-year bond yield on another fully bullish note. So let's look if we are going to have opportunity to go long on UJ. We are rooting for UJ for buy, but what's pending it is we're looking at the structure of the bond yield for Japanese 10-year government bond, and I'm also observing the structure that it seems that the the yen seems to ignore chart and follow economic sentiment. So let's focus on this. This is what we have for now. And we'll have price come here as a supply roof. And we'll have another supply roof here. And so that's it. And there is a breakout from a descending trend line reflecting a strengthening US economy. And this reflection could technically see the dollar index strengthen because we already have a breakout from the structure and followed by a retest. There was a retest after that breakout, followed by a retest after that breakout. I love the yields. So henceforth, we have changed our strategies, and every day we must treat key major economies, look at their bonds, and see their performance, and from there draw economic decisions in trade. So trading is economic data, not just on the chart. You are trading economic data. So the 10-year yield reflects expectation for inflation growth. The Federal Reserve policy rising yield signals optimism about the US economy, boosting the dollar appeal as a safe haven asset. So it really matters. It matters a lot. The 10-year yield dominates over short-term yields. So I think we're starting today. Yesterday closed on a bullish for the 10-year yield. In terms of inflation expectation, investors use the 10-year yield as a gauge. They use it as a gauge to see long-term inflation and its trend. It directly influences currency valuation, especially when inflation is foresaw in the future. When you look in the next 5, 6, 7 years, and investors are seeing inflation crippling, it really affects a currency valuation. So it's very important that we look at 10-year yield, possibly on a daily, to see how the structure is moving. You can see here for yourself. There's a breakout and price came here to retest it, and after that retest, and you've seen the 10-year yield climbing up. And on a daily time frame, let's see if we got another break of structure, and we are looking for clean break of structure. That's what we're looking for. Okay, we found something. There's another structure at this area. So let's see. I think there is hope that the dollar index could see significant strength, and at least up to this level. This is my forecast. This is my perspective. It does not necessarily reflect what market will do in totality, but it gives a clue so that your directional bias will be guided in your critical trading decision. All trade are basically for educational purpose. They are basically for educational purpose and enlightenment. So it's an awakening to jumpstart your consciousness and give you a clue so that you can add it to your strategy and whatever you are doing and make critical trading decision. So in summary, we must acknowledge that the 10-year Treasury yield has remained the most important and the most powerful driver for DXY movement due to its role as a barometer for long-term economic health and global economic and capital inflow into the US economy. So when investors are looking in, they're looking from a 10-year bond yield. Its overall gauge, it tells you the amount of capital inflow that's coming into the system. So the more money comes into the US, the more people want to get into the bond market, the more they want to buy the US dollar, and the more you see the DXY go up, and the more you see carry traders coming in from different continents, from different market sessions, from you see them coming from London Stock Exchange, you see them coming from Frankfurt Stock Exchange, you see them coming from Asian Stock Exchange. Everybody coming into New York, they want to do business, you know. So the more you see all these capital inflows, and you will likely see the DX, the dollar, euro tanking, AUD tanking, UJ buying, GU tanking, and the user tanking. So that's what it is. So I think lately one of the changes I've made in our trading decision is to follow trading from economic perspective, realizing that what you're trading is economic data. It's not just chart. So this price, I think we're optimistic to see if buying can continue. We want to see the yield continue to rise up to this moment. Now, if we break here, ooh la la, it's gone. A break away from that structure, I think I would like to look at it from the the structure we have from the bottom, and this will be my next gauge. It could even be more than that. Come on, it could be even more than that. It should even be our gauge. So let's change the color. This is a complete channel. This is a complete bullish channel. This is what it looks like. You can see it. So now if market breaks out from here, then it's possible that the yield could keep rising, maybe up to 6%. That would be very historic to see that happen. That would be historic. Let's see if in the time past we had in 2018 we had it at 3.2, 10-year yield at that level, and I think it really was a big upswing. And the last we had was in October 2023. Then we begin to retrace from that level. Let's see if structurally we could see why the yield stopped rising in 2023. Let's see on structural perspective if we get a structure to back that up. Let's see if it's possible. Okay. So on a weekly time frame, we have found a supporting evidence as to why the yield suddenly stopped rising in October 2023. It reflects the broader price action in January 2017 and October 2018. That truth provided insight into that drop in price, and the price reflected. So I think it's going to be my new sell roof. So we want to maintain that structure as this becomes our new weekly supply roof. So let's see if it's possible that the 10-year yield could continue to climb until price gets into the supply roof. Very beautiful structure. Very beautiful. Very beautiful structure. You can see that price action very clear. That was our point of sale, POS. That point of sale came from 2017-2018 price action, where price have demonstrated a stronger supply roof. We had a supply at 2016. We have another sale at 2018. And we'll have another sale at October 2018. It came again to reflect price. So let's see if price comes in there, and we have seen the yield dropping from this level. So carry on, traders. Watch out. Watch out. So that's all we have. And